Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Mike LoPiano. We are looking today at some potential downside reversals, some significant risk of downside reversal coming up in GameStop, heading into and coming out of May OPEX. Not sure necessarily how long that's going to last, but I do see this risk on the table. So we're going to walk through some of the data points that are coming up here that are pointing out that this risk is indeed present for me. We're going to talk about those today. But before we do, we're going to start with our gratitude. Today's gratitude goes out to, still on a great streak here is Jake Graff, Go Blue, for sponsoring today's newsletter and video breakdown, as well as to our monthly supporters, Ken Wedmerlin and Not Medical Advice, for helping offset some of my data expenses on a regular basis. Thanks go out as well to those who have supported in the past, right? Those who have bought me a coffee or even dropped a comment or a question, right? Any sort of support like that. All that helps me with my mission here to inform myself more and to better and more accurately project what's really going on with the most interesting stock in the entire market, that is GameStop, and to spread some of that understanding to the best of my abilities to the GameStop investing public. So thank you very much. Goes out gratitude to everyone who supported the channel, who supported me. You have my thanks. So this is one of those days, right? I am not, right? Let me just state this first and foremost, right? I am not a bear. You guys know, if you've been watching the channel a while, you know I am not bearish on GameStop. Long-term thesis is still in place, but we do have these moments, right? And these are crucial moments for those of you potentially who try to trade GameStop, right? I trade GameStop on a regular basis. It is the only stock that I trade. So I'm particularly sensitive to looking out for these types of moments, right? GameStop, we know we have these beautiful, wonderful upward volatility events, but we have these moments where all of a sudden the floor falls out from under us. So understanding GameStop and trading GameStop is being able to understand and predict these transition points, right? So I would say that one of the most difficult things for me when I learned to start trading, right, was I could very often find these wonderful types of opportunities, right? I could find these settings because, right, I got my start. How I started understanding how to trade properly was understanding the environment that is built by options, right? I talk all the time. This is one of the key components of my own analysis when I go into trading, is especially trying to understand the distribution of options market maker gamma exposure and how that relates to where our price is going to go intraday. So understanding that on a day-to-day basis, options hedging on the part of options market makers is primarily what controls our price action. So we have options flows that come in. So we have some dynamic movements throughout the day. And then we have a static structure. So pre-existing options positions that then move the price around, that react to those dynamic flows of options throughout the day. Now, in the fall, right, you'll recall basically from July. So right when I started writing about GameStop over on publishing my analyses over on Superstonk, right? Primarily what I did was I shared this form of analysis with the broader GameStop investing community. We had, and what I would say is this run that we basically had from July into December, with maybe one or two kind of exceptions. We had some slight moments where this was the case, where there was some unpredictability, some bearish externalities, as I've often referred to it. But by and large, our price action was particularly predictable from purely an options and especially a market maker gamma exposure and options hedging analytical perspective. That was largely the case, and I would say it was incredible how well, right, some of these predictions or ability to forecast what institutions or options traders were doing, especially institutional players, were doing in the background, right? Being able to see right when they were moving some of these positions around was incredibly beneficial for understanding reversal points at key points in our trading landscape before and into this big move that we had following National Cat Day on October 29th of 2024. Obviously, right, this most recent phase, this January to April phase, a lot more difficult, right? This was a phase not primarily defined by what we were seeing in our options activity was not as useful as it had been in that sort of July to December period. And a lot of that had to do with locating these points of transitions, understanding these contextual factors that correspond to price transpositions, usually through the use of interventive shorting that is tied to synthetic liquidity, synthetic lending liquidity generated through the abuse of the mechanisms surrounding ETFs. So what we see here, what I see on the horizon are principal factors, and we'll look at this bit by bit. We'll check out our data here, which I have for us composed in today's article. We're going to take a look at some of these factors that I see popping up and why in particular these are red flags to me. So the first thing, we're to continue with our discussion here from earlier in the week, right? We've been thinking especially about what's been going on with cat equity errors. Now we're in a bit of a data dearth, as I might call it, right? So on the one hand, we can see, wow, okay, so 4.7, 4.8, 4.9, 4.10, we had these huge equity errors volumes. Overall errors increased substantially each particular day. So 14 billion on the 7th, 18 billion on the 8th, 21 billion on the 9th, 23 billion on the 10th of April. The deadlines for the settlement of those errors, if those are indeed tied to the realization of fails to deliver basically across the whole market, right? So not just relegated to one ETF, but basically across the entire market, right? Where the sort of fails to deliver or excessive fails to deliver on ETFs holding GameStop rather than GameStop itself may have these types of repercussions across the market. So kind of working within this particular thesis, right, we can, a number of users have said, okay, well, we can, kind of go out T plus 35 days. Credit, of course, goes out. A little chart we looked at yesterday by What Can I Make Today? User at What Can I MT talked about pointed out that, yes, okay, this entire week, basically leading into today, we have this 35-day calendar day deadline that pertains to the closing of potential fails related to these cat equity errors. Now, going forward, right, we have a cat equity error. We have a monthly update coming up after hours today, so we're definitely looking forward to that. We're definitely talking about that on Friday's stream. We're going to do a deep dive into that, but we don't have data after the 10th, which is really weird because the week ends on a Friday. Like, why wouldn't you also include the 11th? So we don't really know, but we have that kind of deadline there. So we get this kind of bullishness, projected bullishness, basically throughout this week into today. And then we don't essentially know from a cat equity perspective, cat equity error perspective, which typically corresponds to bullish price action in GameStop whenever we see these huge amounts of huge numbers of fails at calendar days plus 35 and calendar days plus 70. We do see that institutions, some interesting things, and this is sort of a longer time frame thing, despite that we're a little bit in the dark here, maybe with what's happening cat error-wise and whether this buying trend is going to be sustained. Essentially, we won't have that information until today after close. And hopefully we do. We do see institutions are still accumulating. They're net accumulating GameStop, really big position from Susquehanna, right? Susquehanna more than doubled their position here. Some smaller funds like Tidal Investments, essentially, huge increase in position, bought about 700,000 shares. What else did we see? Nuveen, we saw a number of positions, right? So, we can go through some of this. Definitely, you can go check this out for yourself here over on Quiver Quantitative. Very cool that they have all these filings so you can see the recent filings. We should get some more today. I think today specifically is the filing deadline. Right, decent sized position opened by Jump Financial. Really exciting one here is Renaissance Technologies. So Renaissance now has over 1 million share position. They added almost 400,000 shares by March 31st. Someone else here as well. Tidal Investments, Northern Trust, Geode. Who was this? Is this Marathon? No. One of these in particular. Forgot exactly who it was. It may be Marathon. I think it's Marathon. Yeah, it's Marathon here. Marathon now has GameStop. Marathon Trading Investments has GameStop as its 4th largest position in terms of value. overall. Not a crazy large position there. It's sizable, 350,000 shares. It's now its fourth largest position overall. It's actually even bigger than its SPY position, which is very interesting in terms of value. So very curious there. Good. We can dive into this in some more detail on Friday's live stream. But let's get into some of these other potential factors in an immediate term that may be signaling, that are particularly signaling to me that we are at some risk of short-term downside reversal. The first is, okay, if we look in market context, we are starting to weaken a little bit market-wise. I did talk about this earlier in the week, that probably, right, we see this kind of softening trend. If we didn't go ahead and break through sort of one of these large call positions to the top side, so 590 or 600, we didn't kind of get into that range, we're probably looking at a small correction to the downside, maybe back into the 570 area coming out of May OPEX. We do see here in our gamma data based on total expiry, and what we see now where we are basically in our price positioning here, we're probably looking not a crazy volatile move to the downside, but we might slip a bit heading into and coming out of May OPEX. We may just sort of hold in position into May OPEX, kind of chill in the 580s. But coming out of there with a lot of that call gamma off the board, we might slip a bit. So that's one of those things, right? Again, that's kind of a slightly bearish framework that generally does correspond to it being a little bit easier to push GameStop to the downside a bit. That's what's been true historically. When we see SPY bowling pretty hard, that's when we see less frequent occurrence of the ability to adjust GameStop's price downwards. So we have a little bit of that. That's not a crazy bearish indicator, but it's something. Price movement yesterday, I mean, we did stay pretty stabilized in this upper zone here. I would say from a technical perspective, we did touch, if we scroll on down here, we did go ahead and touch RSI overbought here on the 4-hour chart. We did stay within this channel, which is the same as this daily candle going back to 326. Right, we do have some moving averages supporting us here. So the 24-hour is moving up as a potential support, a potential short-term support, in the 215-minute. I mean, these are not crazy supportive levels, but they can predict some support in the short term. And in fact, if we do have one more day of this kind of cat error clearance thing, we could see another bullish sort of open there. That definitely is on the table. IV is still elevated. We did see a pretty decent rejection of that upper 29 value that we had intraday. Yeah, IV still trending up. The May values for the 23rd and 30th of May have popped up considerably. They were down for a while. They were down in the 60s for a while, even as we were moving up earlier in the week. So they're up now. Okay, none of that's still terribly bearish, right? There is some potential there to continue to move up today. But with that being said, we do see some things popping up on the ETF front and on the lending liquidity front and on the options front. So in terms of what we're seeing lending liquidity wise, we did see shares outstanding of XRT get up yesterday. So our data as of yesterday said that it went up to 8.2 million, which is pretty close to 52-week highs. That's not necessarily anything bearish, but then as of yesterday, so this data is current as of yesterday. This means this occurred during yesterday's trading. We saw a redemption of 2.15 million shares of XRT. That's very substantial. That's a substantial amount of redemption. That typically is done in order to free up or to increase the amount of available synthetic lending liquidity over on GameStop. And what do we see? We do see that the shares outstanding, or the shares available to borrow for GameStop, have gotten up to historic highs. So 5.1 million, that is a historic high. I have never seen shares available to borrow on GameStop exceed 5 million. I've never seen it at 5 million, and it's exceeded 5 million here. A lot of chatter talking about, oh, this has to do with all those institutions that acquired. That seems to just kind of jump to a conclusion that's what we're seeing. I mean, they acquired these shares back by the 31st of March. So I'm not exactly sure why they would have waited to create that liquidity. I wonder if this is more so tied to what's going on with this type of redemption. Maybe there's some de-hedging with respect to the bond traders. Not exactly sure. Yeah, this could be, some of this buying pressure could be from closing short positions related to the bonds. If institutions have acquired bonds who don't intend to arbitrage trade them, that's possible. But in general, when we see GameStop lending liquidity go up like this, it means that there is a lot of liquidity prepared for a reason, and usually that reason is a desire to adjust the price downward via interventive shorting. Just pointing that out. We haven't seen too much actual borrowing of those shares. We can just get a quick refresh live here. Yeah, so we can see, right, they're still elevated. Not a ton of shares have been borrowed early here in the pre-market period. Maybe some might, but not quite seeing that yet. But they are outstanding. They are there. They can be used. XRT also shot down very interestingly here. I mean, as an aside, right, we do see this is something to digest going forward. We did finally get our new XRT FTD data, and the 15th of April, we did get another huge number of fails, as well as on the 17th, huge number, big number on the 29th as well. Curious about what we see for the 30th. Curious why the 30th is not included here, but it is not. But if we go look at lending liquidity here over on XRT, check out the borrow fee. Yeah, so during that little charade there at 7:30, that always happens at 7:30, went to 0. So we went from not today. So yesterday, prior to open, we saw, again, a historic number of available shares to borrow on XRT. 2.5 million units were available to borrow. Throughout the day, that went down to 100,000, came back up to 450,000. And then as of this morning, the shares available to borrow shot back down to 0. And now going into the trading day here, we're looking potentially at 650,000. So lots of things happening with XRT. Again, this just sort of signals risk because of the potential for price adjustment. There is the liquidity to affect a very significant price appreciation, price adjustment to the downside if one or more major institutions would like to do that. That is on the table. However, what also seems to be the case as a potential threat for an adjustment to the downside is a number of particularly large long put orders. So puts, I can't tell if they're long, but they're most likely long puts at the ask that came in throughout the trading day yesterday. So we did see a little bit of that the day before. We saw that on Tuesday at the 28th, but this was a number of big block trades, so several thousand contracts at a clip, came in across a number of different strikes and a number of different expiries all during yesterday's trading. So we had seen those 28 puts come in on Tuesday at the ask, close to 4,000 of them. We saw, so for this Friday's expiry, the 28s were for this Friday's expiry. We also saw several thousand here, so at least a net 2,000. But this is a block of probably a little bit over 3,000 long puts were open towards the close for this Friday's expiry at 27.50. For 523, we had several thousand here, so almost 6,000 puts. Certainly, I think about 6,000 puts were opened in several big block trades for 523, $25 puts going into the close. Those appreciated significantly going into the close there, potentially just from this volume. We see that at 26.50, so for 530 expiry, so that's 2 weeks from now, another big block, almost 2,000 contracts at 26.50, all at the ask. 27.50 for 530, over 3,000 contracts in big blocks, in a big block order here just after 1 p.m. So that's again in 2 weeks. Another one, 6.6, right? About 1,500 contracts at the ask were opened. All of this to open going into the close here. So this looks like this was potentially opened and then closed, since these are about the same volume here. But this stack here, right? So actually, maybe this is probably about 1,000. This is about 500. This is about 500. Right, and this was close. So the min, the bid, right, something like that. All right, but this is still a substantial number, not as big as the other ones, but okay, that's a lot of block put orders coming in. What does this remind me of? All right. Well, this particular situation reminds me of something in particular that I noticed heading into July OPEX. So you guys will recall July OPEX, maybe Superstonk folks. You'll remember there was a lot of hype going into July OPEX surrounding, oh, is there going to be T plus 35 covering of Roaring Kitty's like his share purchase that he disclosed towards the end of June. This is going to T plus 35. Remember, Lenarius talked about this. Biggie had a thesis related to this. This was very big. Now, what I do think happened, right? I made sense, right? We did get this price run. In fact, let's go take a look at our chart here. We can go take a look at GameStop on a daily chart here. So those of you maybe who have, you've been along for the ride here, this, right? So we kind of cooled off from all of this excitement in mid-June, right? Roaring Kitty disclosing his share purchase sometime around here. We kind of traded sideways. And then what did we do? We traded up. So what I think happened is, yeah, there was some T plus 35 covering that did occur with relation to that, with that order. So it was internalized, and then it was slowly covered leading up into July OPEX. Okay. Now, a lot of folks thought that in July OPEX, we were going to do this again. And so a lot of people got burned on options. What I specifically wrote about was, all right, we're heading toward that. We're heading toward 30 here, $30. And this has been true for GameStop for a very long time. $30 is a very difficult position to break through. There is always a massive amount of call open interest at this position. There is always a massive amount of options market maker gamma exposure at this position. In the entire history of GameStop, going, man, all the way through here, certainly in 2024, but going back basically all the way to the sneeze, we have had a grand total of 3 weeks where GameStop's price has closed above $30 going into the end of the week. All of them happened in our last December run. So all of them happened the last week of December as a weekly and the first 2 options expiries of January. So January 3rd and January 10th, we closed above $30. That's it. So December, this would be 27th, I think. December 27th, January 3rd, and January 10th, those weekly expiries, that's all we got, right, with this double top formation here. So going into the double top and then the double top happening on the heels of all of this bullishness in the stock here. We did not close January OPEX around, above $30. We did not, despite the fact that we had a huge position here. They adjusted us down through $30, and that's when we got this huge rug pull right before on Tuesday the 14th. Okay, even amid all of this wild bullishness with Roaring Kitty's return to X, whatever was going on here, all the factors that combined to push us up to $80, $65, all the trading we were doing in the 40s throughout these weeks here. Not a single options expiry during that period, during that huge May-June excitement period, not a single options expiry closed above $30. Not a single call opened at $30 throughout that entire period closed in the money. So in July, what did we see when this took place? So as we were moving up, we had these bullish days. The 16th, the 15th, and the 16th, we were pretty bullish. It was looking pretty good. All Wednesday, we had this really exciting day here. Got a pretty cool high, got a new high. We almost touched 30, right? So our high on the day was, I think, 29.92 or something like that. 29. Maybe it was in the pre-market. Maybe in the pre-market, but intraday high was 29.79. We got to 29.92, I think, as a pre-market high the next day. And then what happened? Thursday, we started falling off a cliff. End of July OPEX, not only did we close below 30, but we even closed below 25, sending that whole position, that huge call OI position out of the money as well. And then we continued down, all the way to a pre-market value of 1750 during the bottom of the Nikkei crash. This supposed yen carry trade issue here. So that occurred, right? What did I write about? You can go check this out. I believe it may have been deleted with my Reddit account, but what I remember writing about here, what I remember noticing is I too opened a long call position here in the money long call position. Actually, was it in the money at the time? I think I had July 25s, August 25s, but back here. So I opened August 25s. They were out of the money at the time. What happened when we ran up here? As soon as we got within that 30, I said, whoa, we're not going above that. That's gonna get stuck. We're gonna get stuck. So I'm gonna take profit there. The next day, right, once I saw that on this particular day, beginning on Tuesday and on Wednesday, after we had touched that high, I took profits on some contracts. We had some big block put orders coming in. This was immediately noticeable. And sure enough, by the end of this day, right, when we opened here, exited the rest of my calls, we went down, a bunch of people got burned, a bunch of people held into July OPEX. It was not wonderful. Now, what I am not necessarily saying that I have a magical crystal ball that's telling me that, oh, yes, indeed, we are headed to the downside here. I do not know that, right? This is based off of probabilities. But, right, I don't even know for certain that those factors that I noticed going into July OPEX at that point are, indeed, I'm not necessarily suggesting that these are causal factors, but these are signals, these are indications that suggest to me that there are traders, there are really well capitalized traders that are betting. Listen, GameStop, you are really disadvantaged if you're trading long puts. Like, that's a really big commitment, and these are not small amounts of capital, right? So this for the 30th, right? This is a $250,000 position that this trader opened up. For the 6th, this is a $100,000 position essentially. That's probably closer to 75. But on the 30th of the 2650 mark, that's almost 100K, right? At least 90K. 25. This is an 87K position. These are not small orders, right? This is about 100K, probably closer to 80 or 85 once we take out some of these little bid orders and whatnot. Maybe even 75. These are not small positions. Okay, I certainly am not throwing around 75, 200, let alone 250K on a long put position. In general, I do not trade long puts on GameStop. I do not like to do that, right? Because what's true usually of GameStop is IV goes up as price goes up and IV goes down as price goes down. So that is the inverse of what we see in SPY. So you're disadvantaged, right? You're really betting, man, especially this is an out of the money put position. Most of these are out of the money right now. This is betting on a lot of these on a big move to the downside, basically right away. So we have the lending liquidity to be able to make that happen, right? So this is not, well, we're really restricted here. No. The lending liquidity is in place to see that type of move happen. If institutions want to go ahead and borrow that, if they want to go take 5 million shares off the shelf, man, they will push us down hard. There will be not a lot in the way to be able to resist that. So this is where we look at our gamma data and we say, okay, is this possible? First thing we look at, we say, okay, is the lending liquidity in place? The lending liquidity is there. What does our options landscape look like? Are we going to get a bunch of hedging resistance that's going to prevent this lending liquidity from having that effect? The answer here, I would say, is no. So first off, as we look to our upside, man, we have 47,000 plus calls open tomorrow. That is generally a good bet that the price that we, let alone that it's $30, that's generally a good bet that the price is not going to close above that position. Why is that the case? The market maker is not incentivized to allow that position to close in the money. And given bullishness, what happens when things get bullish? Traders tend to open long call positions at that strike. Right? They tend to open them huge numbers of long call positions. That is what we've seen. Our volume at $30 has been heavily skewed towards the ask. Unless something monumental happens today, that is corresponding. That is millions of shares of hedging resistance that the price action is going to run into at that spot. This lending, like, even if we don't, right? Think about this. Even if we don't necessarily get this immediately deployed and fall through the bottom down here, the options market maker could easily go and borrow those shares in order to make sure that the price closes below 30. So this entire position is worthless. So they collect all of the premium from this trade. No sweat, right? Okay, that's definitely possible. The next thing is the 28, which is more or less our downside support here. This is, I mean, we're a little far, we're pretty close to that, right? A fair amount of GEX has come off the board down here. We basically have no support between 28 and 25 from an options perspective. 28 is supportive in the sense of normal intraday options flows, we do also have that historical support at that kind of 28.35 level, pertinent to the closing price of our 326 candle. So, okay, that will play a role, but 28 on its own is not sufficient enough as an options hedging position, market maker gamma hedging position to offer us support. If 2, 3, 4 million shares get borrowed and just lasered onto the tape as soon as we approach that position. So just very cautious there, right? All of these things popping up, that similarity to our July price action there. All of this stuff is saying like, whoa, watch out, right? Watch out. Of course, this doesn't change my overall outlook on the company. This doesn't even necessarily change my overall outlook on what we're going to look like going into June. I think there's some likelihood, and got to digest this FTD data and cat errors that are coming out tonight. But we could even. I don't see a reason why we wouldn't continue to see some bullishness into June OPEX potentially. But I think we get a bit of a correction here. I was sort of feeling this anyway, just based on the option side. I mean, I don't like to, feel. I have, I guess, some kind of built up intuition there, and it did sort of that comparison or recognizing that type of scenario felt that way anyway. But then seeing this in our options data, seeing these big orders come in, seeing this lending liquidity pop up, seeing the redemption in XRT, all of this says to me heightened risk. I don't necessarily know that it's going to occur, but all this tells me that I've seen these things go up. I've seen these things take place at moments in time when a GameStop rug pull did in fact materialize. So just wary of that. Just want to make sure I put that caution out there. In addition to that, reiterate that this doesn't mean that I'm bearish on the company, just especially for trading purposes, especially given all the euphoria surrounding, the anniversary of Roaring Kitty stuff. Has returned to X, the 1-year anniversary of this, just offering caution, certainly caution that I'm going to be exercising. So, hey, I'd love to be wrong. Go ahead, go blow the top off, blow out all these put positions. Like nothing would make me happier, but just exercising that caution myself. So, good luck out there. Good luck with your trading. Thanks as always for watching and listening. Look forward to talking to you guys tomorrow and breaking down. Very exciting, breaking down some of this FTD data, doing a deep dive on this and our new consolidated audit trail monthly update, which we'll be able to have a look at tomorrow during tomorrow's live stream. So really looking forward to seeing you guys then. Enjoy your Thursday. Take care now.